Good morning. This is Business Morning. Thank you for joining us. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. Good morning and thank you for joining us. Well, inflation may look like a problem that will go away, but it's more likely to persist and lead to a crisis in the years ahead. That's the warning from economists at Deutsche Bank. Now, Deutsche Bank says focusing on stimulus while dismissing inflation fears will prove to be a mistake, if not in the near term, then in 2023 and beyond. Well, Bismarck Rwani, CEO of Financial Derivatives Company, will help us make a sense of this warning by Deutsche Bank. Good morning, Mr. Rwani. Thank you for joining us.
Good morning.
Good morning. Thank you for having me.
Now, this warning, no doubt, points at the Federal Reserve and its new framework in which it will tolerate higher inflation for the sake of a full and inclusive recovery. And we know that most central bankers, including Nigeria's central bank, seem to be focusing on growth rather than inflation targeting. Here in Nigeria, we have seen inflation gallop to over 18%. How would you contextualize this warning by Deutsche Bank as it concerns Nigeria in the inflation dilemma we face right now?
Thank you. The truth is that let's look at the facts. The facts are that Deutsche Bank is a bulge bracket firm. That is one of the leading investment banking firms in the world. Two, that Deutsche Bank's view is not exactly consistent with those of the consensus economists. What Deutsche Bank is saying is that the inflation argument today is that inflation is transitory, whilst Deutsche Bank says it's much more structural than transitory. And that if nothing is done in the short run, that by the year 2022-23, we will have inflation unraveling. And the consequence of that is that we'll come back to fight it with very high interest rates, and it will lead the world into a recession. This happened in the 70s before, and which led to very high interest rates. Interest rates in the US got as high as 18% per annum under Paul Volcker, and the world went into a deep recession. So they are warning that this could happen. However, let us look at inflation. Inflation assumes that money supply grows at a particular rate while production is growing at a much slower rate, and that it also assumes a full employment framework. The truth today is that there's high unemployment in the US and all over the world because of the pandemic. Therefore, the quantitative easing and the purchasing of assets by the central banks is not just going to stabilize the economy, but also is going to unlock unemployed resources. To that extent, the inflation rate that you're going to be seeing today, I think is coming out tomorrow in the US, is about 4.7%. The threshold for US inflation is about 2%. In the UK, inflation has gone from 0.7 to 1.5%, double the rate. So we are seeing inflation at about 11-year high. But the truth is that these are transitory inflationary problems, and that over time, in the next 6 months or so, it will slow, inflation will moderate. So that's the global thing. But now let us look at Nigeria. Nigeria is almost fully integrated with the global economy. Never mind what's happening with our problems with Twitter, which is an unfortunate development. We are saying that the Nigerian economy is integrated with the global economy. However, if you look at Nigerian inflation is 18.12. We are projecting that inflation goes up to 18.21 when the numbers come out on the 15th. The inflation numbers do not seem to gel with the anecdotal evidence, as you can see. But there are structural issues in Nigeria as well as transitory issues, as well as supply bottlenecks. So you see, for example, the price of onions has spiked because of the strike. The price of beef is going to spike because of the cattle thing. But there's money supply problems in Nigeria. Money supply in Nigeria is going at 20.2%. That is M2, whilst your output is going at 0.5%. So to understand it and for viewers to understand it and simplify this, what you are saying is that the amount of goods in your economy has increased by 0.5%, but the amount of money you have printed is grown by 20%. Obviously, naturally, that would be a big price problem. I think that has to be clearly understood. But that's not the only factor that is stoking inflation. There are exchange rate pass-through, there's insecurity, there's all other issues about commodity prices and the relationship between energy price, the price of petrol, and the price of goods. I don't know if I've answered the the question, and I
All
will
right,
take
Mr.
on
Rani.
some other things.
So that means you don't see
Yes.
the marginal drop that we saw in inflation. We don't see that trend actually continuing.
No, it will not. It will not continue in the short run. Inflation is going to moderate towards the end of the year. I tell you why. We are going into the planting season, but this year, this planting season, we have farmers consuming their seeds and their grains. Normally, you consume your grains and you plant the seeds. This time, they are eating some of their seeds and eating some of the grains, all of the grains. Therefore, the next harvest, you will see a lower harvest because some of the seeds are being consumed as food. Now, that's one. Two, we are going to have an adjustment in electricity tariff. We are going to have an adjustment in petrol pricing. We have already seen an adjustment in the exchange rate. All of these things mean that costs are going to increase, but output will increase subsequently because these structural issues and policy issues are going to unlock some investment and some output. So what I'm saying is that in the months of May, June, and July, you will see higher inflation, but around the month of August, we'll see it slowing down. Secondly, the NBS says categorically that 58% of Nigerians reduced the amount of food they consumed in the last quarter, while only 26% reduced the amount of non-food items that they consumed. Therefore, consumers are beginning to resist high prices. They are beginning to bulk. They are beginning to substitute for cheaper products. In fact, as a matter of fact, they are even beginning to consume less. That is another thing that can help to moderate inflation.
All right, Mr. Rani, just a quick one before we let you go out there. Of course, you've noted that what we're seeing in the global space is a transitory inflationary pressure there. However, it seems what we have here in Nigeria is persistent. Now, taking it from the global space, where do you see the risk of or risk on the currency?
Well, you see, the currency is, there's an exchange rate and there's an exchange rate determining mechanism. What you have seen today is an adjustment of the exchange rate. The mechanism for determining and keeping the exchange rate in fair value, in equilibrium, constantly includes a number of policy strategies that are some unpleasant, some pleasant, but you have to do it. I suspect that the Central Bank of Nigeria is going to adopt a crawling peg strategy to bring the value closer to fair value. What you saw about a week ago was the exchange rate went to 502, 504. It has come back now to about 498, 495. And it begins to converge gradually because the exchange rate has been delayed. And therefore, you are going to see this, but it's going to be painful. It's still, when compared to what it was last year, when the exchange rate was 440 and the price of oil was as low as 35. Today, the price of oil is $72, and yet the exchange rate is depreciating. So there are some things that need to be fixed, and I'm sure the central bank will be figuring out how to fix this. But the exchange rate determining mechanism is just as important as the exchange. The exchange rate is a number. The mechanism is a policy package.
All right. Thank you very much for your time this morning with us, Mr. Rani. We do appreciate it.
Thank you.
Thank you for having me.
So Nigeria has missed its target of achieving 80% of financial inclusion of its adult population by 2020. Now, according to a report by the Enhancing Financial Innovation and Access (EFINA), 36% of Nigerian adults remained completely financially excluded at the end of 2020. In 2019, the country had targeted through the National Financial Inclusion Strategy reducing financially excluded adults to 20%. What are the issues? Let's talk to investment strategy analyst with Afrinvest Asset Management, Temitope Omuse, next. This is Business Morning. All right, let's talk to Temitope now. Good morning, Temitope. Thank you for joining us.
All right, thank you for having me, Jeanette.
Well, the EFINA report on financial inclusion in Nigeria indicates some growth, but noted that more has to be done. What is your interpretation of that report?
All right, thank you for having me. Before I proceed, I'd like to say that financial inclusion is a sine qua non to Nigeria's economic prosperity and sustainable growth. because I would like to also emphasize that we have to begin to look at financial inclusion outside just looking at areas of banking sector or financial system that is profitable to the stakeholder. You have to begin to see it as a very important tool to reduce poverty, that is looking at the uniqueness of people that are financially excluded. The northerners, you have women and people that are less educated. So looking at the report from EFINA about financial inclusion as at 2020, it was reported that financial inclusion increased to 65% from 64% in 2018. So this is actually below the 80% target by the CBN. It's quite disturbing that, financial inclusion is still a bit low. But on the other hand, I could say that it's the performance is loud, although below what CBN expected for 2020. Because, for instance, if you look at what happened in 2016 economic recession, right? As at 2015, financial inclusion was 60%, but it declined to 58% in 2016. And, as a result of that economic recession, because basically you know that if people don't earn well, they won't have access to take to the financial sector. They won't even think about the financial system. And, research have shown that when there's a major economic shock, businesses move from formal to informal sector. Why? Because they want to avoid issues around regulation and a high cost of doing business that might come from cost of using financial products and services. So looking at financial inclusion itself, it's beyond just the banking sector. It includes both the access to financial products and services provided by the banking sector and non-banking sector, including both formal and informal side of it. So on the overall, it's quite commendable that banking sector side of the inclusion increased from about 40% in 2015 to 45% in 2020, because that's still the highest we've recorded so far since the survey began. So that's quite commendable. But I think when we look at it holistically, looking at the subcomponent of the banking sector side, because for non-banking sector side of the inclusion, it actually declined. That also contributed to the slowdown in the inclusion. So banking sector subcomponents, we have about 5 subcomponents from remittances, inclusion in terms of remittances, you have payments, and there's also savings accounts. Another one is how many people receive income using the financial products, and the last one is banking agents. So it's very interesting to note that banking agents is the major contributor to the little improvement we saw in 2020. Imagine that banking agent actually went up by from 3% to 19%, but throughout this period it had remained around 1% to 3%. So if banking agent inclusion had not increased significantly, I'm telling you, by now we'll be looking at a deceleration or a major decline in financial inclusion. So we have to just be happy that at this particular time, banking agents is actually gaining a lot of prominence. And lastly, I would like to stress why banking agent is gaining traction. For looking at this report by Edema Trust Barometer, it emphasized that 2 factors are very important to the banking sector: technology and looking at the trust for banking sector. For technology, trust have started declining. It has even declined over the last 10 years, while the trust in banking sector has increased. So it means people, banking agents, is helping to bridge the trust gap between, the people and technology. Thank you.
Okay. All right, but it seems that Nigeria has a long way to go, talking about financial inclusion. What steps do we need to take to ensure quicker inclusion of more people into the financial sector? And can we pick some lessons from other countries like South Africa and Kenya?
Well, looking at Kenya and South Africa, the financial inclusion is well over 80%. Kenya is about 53%, and South Africa is over 90%. And when you look at the structure of Kenya financial inclusion, we have 44% from bank financial inclusion, and you have about 39% from non-bank financial inclusion. But in Nigeria, we have 45% for banking financial inclusion, while non-bank is less than 15%. So we need to optimize other area of financial inclusion. That was why I started on the note that, the banking sector will always look at profit optimization, and that might not capture areas or strategies that will actually include the right people that are currently excluded, which include, I said, the northerners, women, and less educated people. So we have to address issues around financial inclusion, which include three factors: access to financial products and services, cost, and awareness. Don't be surprised that over 80%, according to a FINA report, over 80% of adults are not even aware that there's mobile banking apps. They don't, and some of them don't even want to use it. So, for instance, again, the adult population that are captured in this survey, over 70% of them are in rural area where you don't even have enough teledensity and in terms of mobile coverage. So we have to begin to develop, particularly, I think, the mobile banking and the also mobile banking and the banking agent. I said if not for the contribution of banking agent that went up from about 3% to 90%, by now we're talking about 56% financial inclusion. So we will begin to look at how to optimize all the subcomponents of the banking sector, as well as using telcos, that is the mobile money and telecommunication, to include more people. And again, I mentioned that trust in technology is a challenge. So this is why banking agents will serve as an intermediary, because if you look around the mobile money players, we know them, they are our neighbors. Some of them grew up together with us. You can trust them. So they will be able to bridge the gap, particularly in rural areas, bridge the gap of lack of trust in technology and trust in the financial sector. So we have to improve that area and also look at how to optimize telcos. And again, the cost, I mentioned cost, is also very important, because now we are looking at, I think sometimes last year, there was a rift between the telcos and the bank. And currently we are looking at increase in cost of transaction. So I think it's high time policies should begin to segment products or segment markets and differentiate products to capture the uniqueness of these people. Most of them are not educated. Let's begin to look at products that understand their uniqueness. And particularly, like I mentioned earlier, we have to build trust, because the achievement in financial inclusion so far is built on technology. More trust in technology, more financial inclusion will be achieved in Nigeria. Thank you.
All right, thank you very much, Temitope Omosuyi, for sharing your thoughts with us on the program. We do appreciate it. Enjoy the rest of the day.
All right, thank you.
An FX Commodities market update is next after the break. Do stay with us.
Welcome back. You're still watching Business Morning. FX Commodities Market Update now. Dashboard for the week of June 1st to 7th. We saw mostly red arrows, except for the FX Export Index, which recorded an increase of 1.31% from the previous week. For more, we have Michael Martin, now Portfolio Manager, FX. Hello, Michael. Great to have you. Good morning.
Hi, Ladi. Good morning. Thank you for having me once again.
Yes, and just before we start, I did buy ginger, though, but could you run us through the trading activities under the week?
Thank you very much, Ladi. So if you look at the table in front of you, the total value of transactions traded on the exchange fell by 77.5%, from around 1.05 billion naira to 235.88 million naira for the week. The total number of contracts traded on the exchange also fell by 78.60%, from 64,468 contracts to about 13,793 contracts for the week. The total number of deals also saw red, falling by 35.85%, from 53 deals to 34 deals. The ACI, which is the FX Commodities Index, fell ever so slightly by 1.68%, from around 403.07 points to 397.08 points. And finally, we are seeing some much needed gain with the FX Export Index, which went up by 1.31% in the week, from 148.13 to 150.08. With regards to the volume of contracts traded on the exchange, as mentioned earlier, the volume fell significantly, with maize being the major culprit, falling from around 63,736 contracts to around 13,483 contracts for the week under review. The other commodity which fell in the number of contracts traded was cashew, which fell from 725 contracts to 200 contracts. All other commodities traded little to no volume in the week under consideration. And with regards to price, we saw only the top and only gainer for the week was cocoa, which went up by 2.81%, gaining 2,500 naira in the contract value to close the trading week at 91,500 naira per contract. And the losers for the week would be maize, which fell by 3.07%, losing 609 naira in the contract value to close the trading week at 19,200 naira per contract. And then lastly, for the price, we have soybean, which fell by 0.31%, losing 98 naira in the contract value to close the trading week at 31,518 naira per contract. And last but not least, as we always say, the fair trade exchange traded commodity, which still remains unchanged in the week under consideration. And as we always mention, if you want to know more about the commodities market, you can go to our website, which is www.afxnigeria.com. And if you want to get started trading commodities, you can download our app, which is available on the Google Play Store and iOS.
All right, Michael. You know, when Laddie said he actually bought ginger, I was wondering how much he may have put in that ginger, considering
really.
the depreciation in the exchange rate that we have seen in recent weeks. What are the effects of this on the commodities market?
So what we saw in the market, particularly in the exchange rate, in the black market exchange rate, is a bit of an adjustment from where the prices used to be, which is around, I think around 485, I believe, to somewhere around, which is now tending towards 490, to sometimes even 500 in some places. And then what that essentially means for us is that it essentially makes the local commodities that we are exporting, which would be cocoa and ginger, maybe sesame, it would essentially make them cheaper for outside buyers to buy them, which would essentially, I would argue, is responsible for the slight increase that we saw in the price of the mid-crop cocoa, going up by 2.81% over the course of the week. But it is the case that the export market isn't particularly active at the moment. Like I said, like I've said in previous weeks, the ginger, we've been out of the ginger market for a while. The cocoa is only trading the mid-crop, which of course has a lesser bean count, accounting for the discount, and we're not really trading that much volume. But something interesting might be coming up though. There are certain narratives that we are seeing in the media that the export earning for the month of November is falling, or did fall, by 98%. If that does happen, and if that is true, we're going to see a significant effect on the exchange rate. And if that should happen, we're going to start seeing significant market activity, not only for even export products on the exchange, but maybe even more so for the grains that we have on the exchange. But ideally, when the exchange rate does change, you would expect to see certain slight effects with the export market, and that's with cocoa and ginger.
All right, Michael, you talk a lot about the spot markets on the exchange. How is that different from the OTC market?
So for some of you that don't know, the OTC is short for over-the-counter, and it essentially means a transaction between two different counterparties. The first of which would probably be a farmer who has cultivated his grain and then harvested and then brought it to the exchange in order to trade. And then also the counterparty would be a processor who is also trying to buy that particular grain, of course, with expectedly a larger volume. And then that transaction is matched on the exchange, and that's what you call over-the-counter type of transaction. A spot transaction is slightly different from an over-the-counter transaction, meaning that the excess volume that is sometimes available on the exchange can then be securitized, which is the spot contracts that we sometimes allude to during the program. They can then be securitized so that the average everyday investor, whether or not you're retail or institutional, you can sort of partake in the commodities market, right, without having to take physical inventory of the commodities that you're invested in. So, Ladi, for example, the ginger that you bought on the exchange now, I'm pretty sure there is no ginger store in your house, and you don't have ginger right in your house. But in some ways, because of the spot contracts that are available, you've been able to partake in the commodities market. So that's how spot contracts are sort of different from OTC, over-the-counter transactions.
Okay, let's look at data now. I mean, that has been a consistent issue across all sectors, but now with particular focus on the agricultural sector, especially with the current food security or insecurity issues building up in the country. Now, would you say data is a major issue with regards to the food security issue in the country?
Certainly, certainly. So look, the lack of data has contributed to the threat, right, to food security in the country, right? And this more so speaks to policymakers, right? Because what data does for you is that data provides a sense of direction, meaning, purpose, and most importantly, a rationale for every sort of policy that you're making about the agricultural sector and maybe even the commodities ecosystem, by extension, right? If we assume or at least agree that, policymaking is hard and it can be like looking for a needle in a haystack, policy making without data is like looking for a needle in a haystack in the dark. It certainly doesn't work. Take Nigeria as an example. The last time that we did a census was in the year 2006. If my math is correct, that's about 15 years ago. I can remember I was in primary school then, worrying about my common entrance exam. It has certainly been a long time. The question then becomes, how do you feed a country, if you're talking about food security, how do you then feed a country whose number you don't know or whose number you can't, you haven't counted or, can't count, right? Most particularly for decision makers in the agricultural sector or maybe in the commodities ecosystem, right? So they want to know data on what production is, what the volume is, what the key farmer concerns are, and what the key infrastructural lags are in the commodities ecosystem. But there is no data that is currently available, to help them make that decision. Even if you look at it from an investment standpoint, right? The capital importation into the agricultural sector is at a meager 2 to 4%, at best case scenario. And what that essentially means is that a lot of the investment decisions that should, or a lot of investment capital that should have flowed into the agricultural sector is not currently flowing because of the lack of data, because investors can't estimate, what their risk and what their returns are because of the lack of data. So yes, I would say that the lack of data has certainly contributed to the food insecurity in the country.
Right, but what are the major, data requirements, for food security improvement in Nigeria?
So when you say food security, there's two things that you're alluding to. First off is the availability of food, right? Because we need food to be available before you can even purchase. And then secondly would be the affordability of food. So when we're talking about the data requirements for food security in the country, there are essentially 4 to 5 different factors that you want to be looking at per time. The first and maybe arguably most important of which would be production, right? So when you're talking about data with regards to production, we want to know at every point in time what the production volume is from one location to the other. We want to know what that volume is as an entire country, right? So we want to know what the distribution pattern for that production is, right? So we want to know what crops are actually being produced and what the production number is, for that particular crop. Secondly, you also want to know what the consumption pattern is, right? So for every single resident of the country, you want to know what the consumption pattern is, how that consumption pattern is distributed, right, over the course of an entire year. What commodities are they buying? How are they buying? When are they buying? And most importantly, why are they buying? Thirdly would be prices, right? And maybe more so open market prices in comparison to exchange prices. And then what you want to know here is how do prices move? When do they move? And why do they move? Right, and what factors underscore those price movements, and whether or not you want to support or at least come up with policies to sort of, help with those factors that are, contributing to price movements. The fourth would be household incomes, right, and household consumption patterns, right. So for every single household that currently exists in the country, you want to know what their consumption pattern is. You want to know when they buy, why they buy, and what they buy, right? And lastly, and maybe not least importantly, would be the farmer, right? So for every single farmer that cultivates and then harvests, what crops do they particularly cultivate? When do they cultivate? How do they cultivate? So all these data points are essentially what I think we would need if we are actually being serious as a country, if we are actually serious about being food secure as a country.
Okay, now, FX is said to be the largest Nigerian agriculture data bank. So what are the structures being put in place to actually, in your data collection?
Thank you very much. So for us at AFEX Commodities Exchange, feeding Africa, right, and achieving the Sustainable Development Goal of no poverty and zero hunger we believe that they would be impossible without data-driven innovations and solutions, right? And what we have tried to do over the past 4 to 5 years that AFEX has been in existence is to aggregate as much data as we can so that we can then begin to provide data-driven innovations and solutions in the agricultural sector. And most importantly, for investors that are looking to participate in the, in the agricultural sector, and whether that's domestic or foreign, the question then becomes: with the data that we have, we then help them understand, first of all, the dynamics of the agricultural sector, but more so what their risk and return would be for every single dollar or naira, as the case may be, invested in the agricultural sector, right? And you can't do that without having data. So some of the platforms that we use at AFEX Commodities Exchange to aggregate some of this data, first off, would be Workbench, which is an enterprise resource planning solution, which helps us, aggregate farmer data, aggregate data on farmer land size, their location, what crop that they're producing per time. The second of all would be the COMEX, which helps us aggregate data on investor investing pattern, right? So what products are they investing in per time? What products are they most interested in, depending on the time of the year and all of that, whether it's fixed income or spot contracts, and a couple of other products that we have on the exchange. Thirdly would be the surveys that we do as an exchange, some of which I'm pretty sure we've already spoken about with regards to the impact report, which certainly helps us measure, the impact of the work that we do in terms of input financing to farmers. And then, we currently are also in the pipeline of doing a crop production survey, which helps us understand, the crops that farmers are cultivating per time and why they're cultivating those crops. And then lastly, and maybe, which is what we do speak to on this program, more often than not, would be price data, which is on a daily basis, weekly basis, monthly basis, and even on a quarterly basis, right? So these are some of the data that we've been able to aggregate, and we are currently aggregating in order to provide some sort of framework for investors that want to provide capital into the agricultural sector and help them measure their risk and their return.
All right, but what other future plans do you have, in solving this data issue in the sector?
So for one, we are not relenting as a company in aggregating the data that we've already aggregated. We're looking to expand, like I've alluded to earlier, we're looking to expand, the number of data that we're able to aggregate. But I think more so importantly, to answer your question, we are looking into the possibility of adding AI and machine learning to some of the data that we currently have, so that it's not just important that we aggregate that data, it's more so now important for us to be able to use that data to predict, right, what is going to happen in the future with regards to some of those data points that I've already mentioned, right? So with regards to production, so yes, we know what has happened with, in the last decade, but then can we begin to predict, what is going to happen in the next decade, right, using data, right? And that would speak to production, consumption, prices, and even with farmer and their cultivation, and even the farmer and their cultivation patterns. Because if we believe that we're crazy enough to help Africa feed itself, we also believe that goal would be impossible without having the necessary data.
All right, Michael, always great to have you. We'll have to leave it there now. Thank you so much for your time on the program. Michael Martin is a portfolio manager at AFEX. We'll take a moment now. And time for our morning calls at the market with Aniete. Well, sentiments in the domestic bourse turned positive yesterday. I believe it's just a blip, as there isn't yet any, strong fundamental to spur the market. Am I right or wrong?
Good morning, Ladi. Well, I'll tell you, it's just about market dynamism, because you just cannot predict the equities market. 1 minute you think it's going to go down, the next minute it just comes up with a surprise. And let's take a look at the surprise. The surprise is that it went up by 0.50%. That's about half of a percent, in contrast to the 0.10% we lost on Monday. And of course, that makes us about a 102 billion naira higher on the equities capitalization. There you see that 20.093%, and that brings us brings the month-to-date gain at 1.2%. But the year-to-date gain is down by 3.5%. Now, take a look at the performance on the sectoral chart. It was the increase on Dangote Cement, 2.27%, which lifted the industrial goods counter, although we had mixed performance on the sectoral index. The banking sector was down, but at the same time, Guaranteed Trust Bank was the major driver or contributor to the uptick that we saw on the market. And then, of course, on the sectoral chart, we also saw but it was up by about 3.7%. Value also up, but the deals was lower. But I think to bring us up to speed at what's going on at the market, especially when Dangote Cement lift was a major contributor to that, let's join David Adorin, who is a stockbroker at High Cap Securities. Good morning, David.
Thank you. Good morning. Nice to be with you today.
Okay. Now, you know, the market, I don't know whether to call it a struggle between the bull and the bear, but we've seen, at least for the better part of this week, where we're midweek transactions now, what do you think, how's the market performing? Is the share of Dangote Cement still going up?
You know, if, let me use this as an example. If America sneezes, other parts of the world catch cold. So that is what happens if there is a movement in the price of Dangote Cement, because it commands a sizable portion of the market. So that movement yesterday actually dictated the direction of the market. And if you also see what happened to Okomo, Okomo also appreciated maximally yesterday. So those are major stocks that move the market. So what we are seeing in the market now really is not a general trend. Is a reflection of what happens to individual stocks that probably are moved by the forces of supply and demand. So generally, there isn't any factor that is propelling the market upwards or downwards, or just a few stocks having more demand at a point in time or the other. But again, generally speaking, the macroeconomic environment is enabling, in the sense that if you look at the trend of the price of crude oil, as of yesterday, crude oil was trading at about $72 per barrel. So that is good news for equities, because there is a trend in the movement of the crude oil market and equities. So that may also be positively impacting on the equities market. But generally, we have a market that is balanced between debt and equities. A lot of activities are taking place in the debt space, so also in the equities space. So that is a welcome development and is in line with the prospects for the year, considering the fact that we are going to have an equities market this year that will be driven principally by the improving fundamentals of the economy, rather than a market that was propelled by monetary policy movement last year.
Okay. Okay. Also, thank you, David, for giving us, an update on the equities market as well as some other markets. So that was David Adorin. Yes. So that was David Adorin, stockbroker at High Cap Securities. So, Chimi, Ladi, I would have given you more updates about other markets, the unlisted securities, the fixed income market, the debt market. But, well, you know, time is never your friend, especially when you're having fun. But I think tomorrow will be a better time for us to give more updates.
All right, let's see how the market actually closes it. Thank you so much, Anita, for that update. All right, so we'll take another quick break now. When we come back, we'll do an opening call to London. Do stay with us.
And for our London morning calls, we have Juliana on board. Good morning, Juliana. Well, the UK's competition watchdog has launched action against British Airways and Ryanair over their refusal to give refunds to people during the lockdowns when they were lawfully unable to fly. But the argument there is that the airlines are saying that they also had a tough time during the pandemic.
Absolutely. Good morning, Chimazi. The airlines, of course, have had a tough time, but, of course, so have consumers. Consumers have lost lots of money, especially holiday makers, and that's exactly what the CMA, the Competition and Markets Authority, are going to be probing, whether or not British Airways and Ryanair broke consumer law by not offering a full refund to a vast majority of passengers who were unable to legally fly and were not able to receive a refund. Of course, the response from airline bosses is pretty loud, and they're not happy. A spokesperson for British Airways has actually said, you know, this is a huge kick in the teeth. They've offered refunds to over 3 million customers, and it's pretty unfair for the government to be doing this now at a time when they've decided to basically close their borders. Ryanair have responded saying that they have been giving refunds to customers on a case-by-case basis. But it's not that these consumers have been abandoned. They have been offered opportunities to rebook, and I believe BA have offered vouchers. But, you know, this investigation, this probe, will determine whether or not that's been good enough.
The US has eased travel rules for 61 countries, but not the UK. How are the authorities reacting to this?
Well, again, more airline news. Airlines, again, not happy. You know, if you think about it, especially our business travellers who are watching the show, you know, London to New York was one of the most popular destinations in the world. I think Heathrow at one time were flying about 30 flights every single day between London and New York. For Virgin Atlantic, that's 70% of their revenue. I believe BA were making about £1 billion every year from that route alone. So this news announced by US Border Control, not really surprising. The UK have similar restrictions. I believe US is on the amber list now, so you can travel between the UK and the US. But if you want to go from Britain to the US, you have to be in a country outside of the Schengen zone for 14 days. If you're coming from the US to the UK, you have to self-isolate before you can do anything for 10 days. I know that airline bosses earlier in the week are trying to desperately urge Washington and Whitehall to come up with some sort of travel corridor, because even though we expect business travelling to be less than it was in the pre-pandemic days, it's so lucrative that both sides are desperate to get it up and running again.
Well, the day is just starting, and I'm sure we have quite a lot to chew, and we'll be talking more to you at midday. All right, Juliana. Okay, let's look at the crypto market. Well, Ladi, Bitcoin took another beating yesterday after news that U.S. officials managed to recover most of the ransom paid to hackers that targeted Colonial Pipeline. Well, this might just be a case of concerns over security of the cryptocurrency. However, El Salvador becomes first country to adopt Bitcoin as legal tender after passing the law. So how much of impact has this had on Bitcoin today?
Well, El Salvador made history, you know, actually making Bitcoin a legal tender. And yeah, maybe the market is reacting good to that, because we had a bounce for Bitcoin from about 30,000. It's trading about 34,000 this morning. Ethereum is also in the green, and a couple of other altcoins are in the green. So the market is actually reacting positively to this news, because Bitcoin has been battered with negative news for the past weeks. The market cap is at $1.53 trillion, up about 2.07%. The 24-hour volume, $102.56 billion traded in the whole crypto market, up 9%. Bitcoin dominance is actually inching up there at 41.45%. That's the price of Bitcoin this morning, 34,330, up 5%. 24-hour volume trading in Bitcoin, $47.18 billion. It did drop as low as 30,000, and most analysts actually said if it hits that 30K range and bounces back up, the bull market might be back on. But you know, this market is so unpredictable. Bitcoin is still flirting with that 200-day moving average and moving out from the oversold region on the relative strength index. Let's talk to Solomon Amunde now for more details. Hello, Solomon.
Hello, Larry. Good morning.
Good morning, Solomon. So, yeah, we see El Salvador making history, you know, making Bitcoin a legal tender. Is that what's propelling the market this morning?
Technically, that's what it was preparing the market.
Hello, Solomon.
Hello? Yeah, can you hear me?
Okay, yeah, I can hear you. You can carry on.
Okay. So technically, that's not what's propelling the crypto market today, but it's actually a welcome news in the space. It's something we've been expecting for the past 1 week now, and the whole crypto space is actually quite happy for Salvador being the first country to actually endorse Bitcoin as a legal tender in the country. So it's a positive move in the right direction for the crypto space.
But do you see other, countries following this trend at some point?
Yes. Currently, there are other Latin American countries that are already willing to do the same thing. We have the likes of Paraguay, Mexico, Brazil, Argentina, Panama, and they are gradually lining up and trying to send a proposal to their Congress to look at in order to make Bitcoin a legal tender too. So it's something that we should expect at least 4 to 5 more countries before the end of the year adopt Bitcoin as a legal tender.
Okay. Well, Bitcoin has finally hit that 30K region. What do you expect moving forward?
Yeah, I still think we haven't actually hit the bottom yet. I'm expecting us to hit 29,000 to 30,000. Yesterday we went as low as 31,800. We haven't really hit the 30,000 mark. So I'm still expecting us to trade sideways to the end of this month, and probably by next month we can start breaking out of 40K.
Then how do you expect alts? Because most of these altcoins have dropped about 50% of their value. How do you see them moving with this volatility?
Yeah, actually, the market has been quite predictable for the last 2 weeks. And good traders have been making massive profits from alts. Why? Because they've been dropping times 3, times 4, the way Bitcoin is dropping. It's simple. They've just been shorting them using USDT pairs. And it has been very, very much profitable. And there are some other traders that have been trading altcoins sideways. They've been trading them between their high and the lower low. And it has been very, very predictable for the last 3 weeks, as I said. So I hope we still continue for the next 2 to 3 weeks. It's an easy trade to say.
All right, Solomon, a quick one before I let you go. What are you holding right now?
Okay. As of yesterday, I had to load up my bag with Ecuador, and I also bought into Kusama package. I also bought in Solana at about $4. It's a good entry, and I also bought cake at about $16. So these are my heavy bags at the moment, which I acquired yesterday.
Okay. All right, Solomon, always great to have you. Thank you so much.
Thank you very much.
All right, top also market cap, you have BNB up 4.26%, Cardano up 4%, Doge up 2%, and XRP there still below the $1 mark at 87 cents, but up 2.23%. So, Chime, it's not looking bad today.
Quite a lot of assets there on Solomon's portfolio there.
Yeah.
But then, while you buy the dip, remember, don't use your rent money.
No.
And talking about what's pushing Bitcoin this morning, aside from El Salvador, there's also this story about someone, an anonymous, threatening Elon Musk.
Oh, yes.
Yeah.
The anonymous hackers. Yeah.
I mean, perhaps that could also be what's pushing Bitcoin. But a lot of people still think that maybe Bitcoin can actually go as low as $20,000. I don't know how that is going to happen, but let's see.
Let's see.
I mean, it's a market that functions every minute, every hour, and we'll keep monitoring that.
Exactly.
And for you to play in this market, you really have to be very careful and seek financial information or advice from the professional. I'm not one. I don't know about Ladi. Maybe Ladi is. I don't know.
And considering we don't have Twitter for now, you know.
Absolutely. Okay. That's it on the program. We'll be back with more business updates later today by 1:30 p.m. on Business Incorporated. Keep a date with us for that time. Thank you for watching. I'm Chimeze Obi Iwagu.
And I'm Ladi Williams. Thank you for watching.